can see if I look at, for example, the Vanguard traders, or the rotational traders, or the beta zero traders, or the volatility traders, they're all bearish into the highs. Here was the Vanguard traders. Does anybody think this was a buy trade on a macro chart? This is Vanguard, VUGVYM. Does anybody think this was a macro buy trade? Now, why did it go up then? Because the curve started to steepen, that's why. The curve started to steepen. So with the curve steepening, it was a little bit of light relief for the sellers to say, well, you know what, I'm going to take some profits. We're seeing the back end of the curve steepening, which means a little bit of an easing on the interest rate policy, right? So we started to see the back end steepening. But that's okay for the first move higher, right? That's only valid for the first move higher. So there's the back end steepener coming in there, which allowed the buyers to buy. And the price went up. Vanguard didn't like it, but the price did go up in line with that steepener, and the price kept going up in line with the steepener. But then the market stopped kind of steepening, didn't it? And the price started to get a little bit away from the fact that there was a steepener in the background. They started to become a little bit over purchased. And obviously then it was just a case of watching other elements to see if anything else lined up. Take a look at the volatility price. The gamma line, VVIX. What was the gamma line telling you? Well, the gamma line was bullish at the bottom edge. Brilliant opportunity to buy bottom edges, right? But as you can see from this point onwards, the gamma line actually has been bearish ever since that whole high price was put in, wasn't it? The gamma line's been bearish. And it wasn't just bearish. If we go back 2 days, you'll see into the high price here. Let's forget the VUG line at the moment. But looking into the high price here, what happened here? The gamma line actually started to become very slippy on the downside. Remember, gamma lines is slippy when the market sells, not slippy at the top edge as such. So when you see the market starting to sell and the gamma line's short, that's going to open up the floodgates for a big sell, isn't it? Absolutely. Absolutely. So you see that gamma line lines up perfectly with what happened during this day here. This was the Tuesday sell-off. Yesterday, the gamma line just never went bullish. You can see that on the retest attempts up here, for example, the gamma line just did not join in, which left the market still slippy. But I told you that yesterday, did I not? I'm pretty sure I gave you a shout out for the fact that if we got through the 805, 810 level, that this market could get very slippy. Did I not mention that? Vineet asked a question, in fact, so I did mention it. Vineet asked a question about why is it not on the zeros? And I says because the trade is going to have to take place on the 10s and the 5s. The buys has to be held above the 10s and the 5s, otherwise you get this slippiness coming in as you start breaking the zeros. So obviously when the gamma line's selling off, you've got no decision to make. It's sell side only. We told you that yesterday. Did I not tell you that yesterday? I'm pretty sure I told you that yesterday, yeah. So sell side only. The best opportunity to sell it was on this retest here. That was at 1800 hours on the bond auction. And as soon as the auction came out, everybody was like, oh, crap, this is bad news. And obviously that's when we started to see that big sell on bonds, right? Big sell on bonds means a big rally in interest rates, because otherwise how do you encourage anybody to buy US Treasuries? A big rally in interest rates is not going to be bullish equities, is it, guys? Seriously, it's not going to be bullish equities anymore. So we can see that set off the sell on equities aggressively through that phase, didn't it? So no surprises. Obviously, at that stage, the curve never actually moved much. To be honest, the curve didn't have this kind of response that one would have imagined it would have had overall, but that's the way it goes. Now, we've looked at the Vanguard line. We've looked at the price of gamma. If we look at the beta zeros, what is the beta zero? The beta zero is when the beta is effectively zero in the equities. So it's a hedge trade, right? That's all it is. It's a hedge trade that takes all beta out of the marketplace. It's called beta zero. Well, take a look at beta zero for the last few weeks. Beta zero's never gone net bullish, has it? So these are hedge traders. They're not interested in directionality. They are simply hedge traders. In other words, this line should be exactly what price is as a hedge goes, right? This line should be exactly what Nobody trades this line that is not doing hedge business, right? It's not a kind of line that somebody says, oh, I better buy some BTAL, right? So this should be an exact hedge for the equities. It's miles away from being an exact hedge, which means that there is some sort of skew developing in equities, which you need to try and take advantage of. And it's been visible. The bottom edge was visible. You saw there was a very strong reversal bottom edge in that phase. So there was a big buyer showed up for the betas in there. You can see that that was the bottom edge to start with anyway. And then from that point onwards, you can see it's never went bullish. Never went bullish. And obviously the sell that came in from that beta zero, you can see even in the market in the background here, the beta zero opened with a bit of a buy side pop, but then sold off immediately, and the sellers just came in and mopped up that short sell. One of the easiest trades you'll see. And we called it in advance. Why did we call it in advance? Because I had the conversation with Vineet yesterday that the hedge is going to come in at the 10s and the 5s, usually the 10s on equities. So if it doesn't buy the 10s, it's probably going to break the zeros, and if it breaks the zeros, it's going to be a sell-off. Well, the hedge never came in at the 10s. They didn't defend the 10s, did they? The price came back to 10s here, and they didn't defend it. They sold the price through it. So then it became a sell at the 10s, and that was the result of the big sell-off there. 50 points, $2,500 per contract. Lovely trade, lovely outcome, isn't it? Lovely trade, lovely outcome, guys. Crazy good.